Okay, this week's outlook. Just a little quick intro to the actual outlook. We're obviously seeing risk sentiment bounce back. I mean, on Thursday we were sitting around 20%. Now we're back to 55%. A lot of that is driven by the fact negotiations between Iran and the US supposedly have gone quite well. So just based off that, we are expecting a downside gap on oil off the market open. Obviously, a lot of oil's upside pricing has been due to geopolitical concerns, and with that starting to diminish, we do forecast a slight pullback in oil. Not a pullback, but definitely a gap to the downside before we continue to go to the upside, because I still believe that the fundamentals for upside in oil are still there. You've got supply being pretty constrained. I mean, OPEC are not hiking output. In March, that meeting came out as they're gonna hold supply hikes for March, which already is a bullish factor as less supply, price goes up. And we also have a lot of inventory news surrounding oil, which should keep it relatively elevated. But we'll go over that when we go over the CAD, obviously due to its close link with oil. But starting off with the US dollar for this week. This week we obviously have NFP, as you can see here. Payrolls job growth on February the 11th. It was meant to be last Friday, but was delayed due to the BLS. But yeah, high impact, of course. Payrolls job growth is actually forecasted to come in. If we go here and look at high impact for the week ahead, it's meant to come in around 70,000, I believe, which is obviously an improvement from the previous reading of 50,000. If we scroll down to the 11th, we can see, payrolls job growth. Click on it here. Forecast 70k, previous was 50k, so that should be good. And I believe unemployment, unemployment is forecasted to stay the same at 4.4%. So overall, this is a hawkish consensus around the print. There is a hawkish consensus around this print, which should support the US dollar leading into NFP, and then obviously NFP is going to be the key factor which deciphers where the dollar goes from there. Leading up to the release of NFP, we are expecting to see some upward momentum in the US dollar as markets reprice a positive NFP print and short-end yields likely retrace, especially considering we closed above the 3.5% handle on Friday. We do think we could see a slight bounce to the upside in US short-end yields, which will support the dollar. However, that's only till the 11th. Regarding geopolitics surrounding Iran, Trump signed an executive order on Friday that may impose a 25% tariff on countries that do business with Iran. However, this hasn't been implemented yet. But if it is, or if it does get implemented, expect USD downside to get priced in relatively quickly, as obviously the sell America trade will flare up again. Sentiment should bounce back next week, which can limit US dollar gains. So overall, we're pretty neutral on the dollar. We think NFP will decipher where we go from here, and if you want to trade the dollar leading up to NFP, we favour upside. Regarding high impact news this week, I probably should have gone over news first. But regarding high impact news this week, we've got obviously NFP out the US. We've got a couple speeches on Monday, nothing too serious. Tuesday, we then have retail sales in the US, which it's good to look at that. Wednesday, NFP, unemployment, big labour market data from the US. On Thursday, we then have GDP quarter on quarter and month over month in the UK, which is looking sluggish as usual. 0.1% forecast. Previous was 0.3%. That's about it. Weekly jobless claims is expected to rise a slight tad in the US. Then going into Friday, we have inflation, a big inflation print in the US, which is forecasted to slow to 2.5%. Sorry. So if we do end up getting a dovish NFP print, expect downside in the dollar from then on, because inflation is looking dovish as well. So best case scenario really is a miss in NFP, then we can get into some dollar shorts for sure. But we will go over that when we get onto technicals. So yeah, that's essentially the dollar done. We're pretty neutral. Two very, very big pieces of data this week, which are going to be monitored. Leading up to NFP, we do forecast some upside in the dollar. And then if NFP is a dovish print, we're then forecasting downside dollar because CPI is also looking quite dovish. Insights-wise, looking at the dollar, pretty neutral. I mean, the funds are pretty neutral. Specifically, like dollar against the yen. We'll go over the dollar against the yen and these ones when we get into the specific AUD and yen analysis. But looking at what Danske Bank have said here, they're saying that there is a tactical window for a dollar rebound, and that does seem to be consensus among a lot of the institutions, a slight rebound in the dollar, which we have seen. But data this week is super key, and that's going to be the main driver. We can't just base it off previous data. We're looking forward. We're a forward-looking market. So yeah, that is that. Yield reactions have been pretty hawkish as of late, and obviously this NFP print seems to be hawkish. Another thing I want to get everyone's attention on is the Fed watch. We've actually seen a dovish repricing in the short end yields, obviously reflected in the Fed watch, meaning the odds of a cut in March have actually increased from around 10% to 23%, and so have the meetings in April and June. Obviously, that's not too good for the dollar. And then if we look in the recent news here, you can see that Fed's daily sees labour market vulnerabilities and room to cut interest rates, which could be a slight hint of what they see the NFP coming in as a bit of a miss. That's obviously dollar bearish. So yeah, that is essentially that. Obviously in Feb, dollar's pretty neutral. So I mean, seasonality-wise, it could go either way. And yeah. So yeah, we do think we could see a slight rebound in the dollar coming into next week. So that is the dollar done. Now onto the pound. We are definitely bearish on the pound, but we have to be aware that we are extremely oversold on GA and GN, that being the pound against the Australian dollar and the pound against the New Zealand dollar. Short end yields continue to fall in the UK as data softens and central bank rhetoric remains dovish. Regarding last week's BOE meeting, we saw the short end of the curve fall 160 basis points. So if you actually look here, you can see it was a very dovish print from the Bank of England, and FX implications, lower GBP yields may pressure their currency as rate differentials narrow. And that's exactly what we're seeing. I mean, we're seeing divergences between Canada, Europe. That's why like GCAD, Euro Pound are some great pairs to get into this week, which we'll go over. So yeah, basically we're seeing very much dovish repricing in the UK. We're also seeing long end yields creep up following political issues with Keir Starmer and also divisions inside the BOE. Data-wise this week, it's looking rather quiet. We have obviously GDP on Friday, which is looking to kind of slip. And looking at what the funds are doing, we're seeing that they're being they're definitely on the more cautious side for the pound. It's not one of their favourites. Looking here at the institutions, MUFG are bearish on the pound, as you can see here and here. They are saying that the pound is going to be hit by the dovish hold, leaving a March rate cut in play, as you can see there, which we went over. Looking at the recent news, Bank of England's pill plays down speed of cuts, warns of new global shocks. Two bearish pound pieces of data there. And Goldman and Nomura see pound sliding to 3-year low against the euro, which is very, very interesting. And we agree. I mean, we totally agree. Data-wise, GDP is the main print on Friday. Labour market is definitely weakening. We're seeing unemployment at a 5-year high. I mean, the unemployment rate itself is at 5.1%. Inflation's slowing. And then February is typically a very poor month for the pound, you can see here. And I mean, it's been all right so far. I mean, more neutral for the pound, but we think, especially over the last week, we think downside is renewed for sure. So yeah, that's everything on the pound. Definitely bearish this week. Looking at the euro, well, the euro we're definitely more neutral on the euro. However, we do acknowledge that it's definitely one of the more appealing neutrals. So I'd say neutral to bullish on the euro. Fixed income markets are clearly awaiting for a new catalyst. Short end yields are ranging, and the ECB rate decision last week was essentially a non-event, barely shifting market pricing for future rates. So expect euro pairs to be mainly driven by the cross. Our eyes are on euro pound as mentioned, and similar to the pound, the funds are not the biggest fan of the euro as of right now. They're more a fan of stuff like the Australian dollar. Even the dollar, actually, they're a big fan of. So yeah, that is quite interesting. Obviously, from Reuters here, ECB's, I'm not going to even attempt to say that, flags persistent inflation undershoot, slowing growth as risks to outlook, which is obviously bullish for the euro. That is really it on the euro. It's quite a quiet pair data-wise. There's nothing you can clearly see here. There's nothing really, no upcoming events, nothing that important we need to keep an eye on this week. It's mainly going to be driven by its cross, so that is why we remain neutral. Onto the CAD, we are definitely more bullish on the CAD. Short end yields are barely moved following Friday's labour market print, which paints the CAD in a similar light to the euro, where markets want to see more data to determine whether the market's pricing tightening at a faster pace. Regarding US oil, we are seeing movements to the upside. However, we are forecasting a slight pullback at the start of the week due to Iran and US tensions starting to fall. However, the fundamentals still support upside in US oil, even without the geopolitical tensions, which support our bullish view on the CAD as of now. Institutions are pretty neutral, and some of the data is coming out a bit bearish. Macklin warns of rate cut risk amid structural economic changes, obviously bearish, and the data is coming in pretty neutral to dovish. So we're bullish, but we need oil to be in our favour for sure. So yeah, we're pretty neutral on the CAD. Bullish to neutral. We think there's better crosses out there. Australian dollar. I'll do the Australian dollar and New Zealand dollar together. But essentially, we remain bullish on both of these currencies, especially the Australian dollar after the hawkish RBA hike. You can clearly see here it was a hawkish print. It typically supports the currency via rate differentials, which is driving a lot of the Australian crosses as of now. Data remains strong in Australia with the labour market strengthening. I mean, if you just come down here, you can see unemployment rate is at 4.1%. A multi-month low, and the employment change is at 65k, which is lovely. So labour market wise, very strong at the moment, and inflation is creeping up 3.8%, way above the bracket the RBA want, which is why we obviously got that hike on when I think it was Wednesday last week. So yeah, definitely bullish on the AUD. Equities are expected to bounce back this week from supposedly good progress on Iran negotiations, which should also boost sentiment and the Australian dollar. If we look at the institutions, you can clearly see here that the RBA performs a hawkish hike, and a break above the 0.705 on AUD USD is next. So they're bullish on the AUD against the dollar, and so are obviously Bank of America expected a hawkish hike, and that's what we got. Looking at the recent news, Bloomberg say that the RBA hike spotlights inflation pressure central banks can't fix, which is obviously bullish. And then we've got RBA follow-up rate hike possible in March. Westpac's Ellis warns, which is great news for short-end yields and everyone who is in upside in the Australian dollar. For the New Zealand dollar, we are seeing a similar story play out where short-end yields creep higher. Data seems pretty strong, and especially European funds are liking the NZD. I think we might even have it here. We don't, unfortunately. But essentially, an article from Bloomberg came out, and they stated how they were bullish on a lot of European funds are now bullish on the New Zealand dollar, which is just another confluence to be trading with the banks instead of against them. An additional point is that the Chinese yuan continues to strengthen against the US dollar, which tends to benefit the AUD and NZD via proxy. So yeah, that is a New Zealand dollar. Looking at the yen. So the yen. We remain bearish. However, we are very cautious. Reasons for being bearish, the same reasons highlighted last week. Essentially, Besant ruled out intervention. watch last week's breakdown where we go over the yen. It's the reasons are there. They're very, very clear. The long end continues to rise. We're seeing a lot of political issues. We've now got another election coming up, and intervention fears are going to start creeping up, which is why we are cautious on the yen this week. I have to reiterate. Exactly like what Goldman Sachs said here, they are cautiously bearish on the yen, but wary of adding fresh positions right here. And we agree. I mean, we'll go over the technicals after this, but we're hovering around the 158 handle on UJ, which is obviously the previous level where intervention fears ramped up and we saw that sharp sell-off. So, yeah, we're definitely being careful around that. Yield reactions, I mean, it goes without saying, short-end yields in Japan are shooting to the upside. They're super hawkish. However, the political side of things and the economy just in general is holding them back for sure. The pace of rate cuts is also another reason. Sorry, the pace of rate hikes is another reason why we're seeing some weakness. Looking at the news here, it's pretty neutral. You've got former Japan currency chief saying that the FX intervention should be backed by rate hikes, and then you've got news here from Reuters saying that Japan's biggest banks are ready to increase JGB holdings despite growing losses. So yeah, overall we're still bearish macro fundamentally on the yen. However, we're wary of adding positions. Goldman Sachs couldn't have said it any better because we're approaching a very dangerous level. I mean, if you just look at if you go on the heat map and we just look at the last month. Which currency has been in the red? The yen. The yen has been getting destroyed. It's been getting destroyed, the yen. And it has been for not even months, for years. So, and we're now reaching the intervention level, which is where you have to be extremely cautious and careful. So yeah, onto the Swiss franc. Not a lot of data as usual, but with volatility set to ease this week from a geopolitical standpoint as talks between Iran and the US seems to have gone well. This should also halt gold's upside trajectory. However, one headline can switch this narrative on its head, and so yeah, you need to be careful going into Swiss franc crosses. Secondly, a lot of institutions who didn't manage to get out before the 20% retracement on gold are now going to be taking some profits. So, taking profits on gold, we're going to see some buy the rumour, sell the fact. So you're going to see some downside. So yeah, that is what we see on the macro standpoint for all the currencies. Pretty clear week for us. Very data heavy for the US. And yeah, let's move over to the technicals. So moving on to the technicals for the US dollar. Like we mentioned, we're looking for a nice bit of upside off the open start of the week. Kind of want to see something, could probably even enlarge that, but I want to see something come up here, probably reach the 98.25, and then the big print on Wednesday at 1 p.m. This is going to be the deciding print, whether we continue to the upside or whether we melt back down to the downside. So yeah. Pound AUD, I like this level here. I like the retracement here. We just have to be very careful that we're not going to get caught out because we are extremely oversold. But the fundamentals still point to downside. So get in, get out, play your statistical card well, and yeah, should be a good week for the GA. GCAD similar. We're expecting a nice pullback off the open, so we could even get in some GCAD longs off the open because we're expecting oil to retrace. However, the larger trend will remain to the downside, and we like that. We like a short position from around the 1865, 187. GN, same thing as GA. So yeah, Euro Pound, we're looking for a bounce from either the 86.75 handle, which we are in right now, or the 86.5. This level here looks beautiful. If price comes down here, super cheap. I'd love to get in here. Euro Yen, similar idea for all yen crosses this week. I want to see price come down here, but we have to be cautious. If price, let's say price comes up to the 1864 or something like that. Actually, it's gone the 4 hour. If price comes up to the 186, 1865. I want to, and we then see a very aggressive push down, I'm going to leave it because I don't want to play with intervention. Same thing with AUD yen. I like that. Same thing with NZD yen, dollar yen. Same thing. But I have never been more wary of this level we are at. Apologies for the messy charts, but this is when intervention fears kicked in at 158. So we do definitely need to be careful this week on yen crosses. CAD yen, same thing. CAD Swiss, I think this could be a beautiful play. However, this is key. We need to see how oil opens on the Monday. If oil opens and it's relatively unmoved, I'll get in this. However, if we see a massive drop in oil off the open, I'm going to leave it. Dollar CAD, similar thesis. Very much depends on NFP, but yeah, could be nice for some statistical plays for sure. AUD dollar, same thing here. I do like the AUD dollar, but it does depend on the data. Yeah. Euro Swiss, this could be a lovely play this week. We're obviously seeing a lot of algos around here. So I think a bounce here, beautiful. Euro Swiss makes sense. Euro dollar, same thing with the dollar crosses. I think we could see a bounce here. And yeah, that is everything from me. Equities wise, I'm looking for continued upside. Where would I get in? I'm not sure. We're quite overextended and I don't see a pullback down here. So yeah, that is it from me on the technical side of things. As always, first month get 50% off using this terminal with the code Cognito50. And yeah, let's have another great week in the markets. Last week a lot of our positions hit take profit, I believe. You can go rewatch last week's outlook, and AUD yen hit, GA hit, GCAD hit. So yeah, good couple. I think we made like around 5-6R last week, which obviously risk 1%, that's 6%. So a great week. But yeah, that is everything from me as always. Shoot any questions you have in the comments. Shoot them over on our Instagram and Twitter. And yeah, let's have a great week.